Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. So right now the net asset of my stock account is $70,672.26. Today I've made a gain of 0.04%. And today, let's see, Apple has closed down 0.95% to 189.43. SQQQ closed up 0.286% to 16.35. And SPY closed down 0.52% to 456.69. United Natural Gas also closed down 5.34% to 5.34. Today, all three major indices closed lower. Dow Jones Industrial Average closed down 0.11%. Nasdaq closed down 0.84%. And S&P 500 closed down 0.54%. Today, the tech industry led with a loss, with semiconductors closing down 1.65%. The major U.S. indices have been temporarily suspended after a recent consecutive rally. The recovery in the Treasury yields putting pressure on the technology stocks. This week, the market has focused on Friday's non-farm payrolls data to further determine whether the Fed rate hike will be over. The U.S. Treasury yields have recovered on Monday. The 10-year Treasury yield rose 3.7 basis points to 4.261%, rising as high as 2.299%. On Friday, the S&P 500 hit its highest close since March 2022, bringing the year-to-date gain to nearly 20%. The Dow also rose for 5 straight weeks, up 9.4% this year. The technology-heavy Nasdaq Composite jumped 37% in 2023. The driver of the recent surge in U.S. stocks is the consensus that the Fed has ended raising interest rates. While Fed Chairman Jerome Powell trying to suppress the cut expectations, investors remain confident that the Fed has ended raising interest rates. Mr. Powell said it was too early to expect policy easing, with U.S. monetary policy clearly showing the economy as expected and benchmark overnight interest rates in inhibitory range. According to Chicago Mercantile Exchange Fed Watch tool, the market expects a 60% chance as the Fed rate cut out before its March meeting, compared with a 21% chance just a week ago. Analyst Stephen Ince, SPI Asset Management, said in a comment, current market sentiment suggests a possible shift in direction of monetary policy, with market participation increasingly suggesting the era of sharp central bank raising interest rates may be coming to an end. U.S. stocks have been rebounding since October as investors increasingly bet that the Fed will start cutting interest rates next year. The idea is that the Fed is finally ending interest rates to curb inflation has long been a positive factor for markets. In November, the Dow recorded its best performing month since October 2022. Both S&P 500 and Nasdaq Composite posted their biggest monthly gains since July 2022. While the gain has been maybe unsustainable, Wilson said December could bring short-term volatility in interest rates and stocks before a more constructive seasonal trends and the so-called January effect support stocks. The S&P 500 rose about 9% last month on optimism that the interest rates has peaked. That put the index in overbought territory, a level of technology that is often considered a precursor to a sell-off. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.